It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts. Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots. On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think, like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here, and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command. So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines. And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello,
Hey Danielle, it's Aki.
come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ,
Yes,
schedule a doctor's appointment.
no problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one. And that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth and
comfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Yay, it is Friday. I don't think I would ever throw a drink at you, by the way.
That's nice to hear, actually. It hasn't happened in a solid, 35 years, but I'll never forget. I'm pretty sure Stephanie Morrow dumped a Coca-Cola on my head under the bleachers at a Granville High School football game. I was like 15 years old. I can't remember what I did, but I'm sure I deserved it.
All right, folks, maybe we'll get more on this riveting story a little bit later on. But first up, welcome, everybody. It is Bloomberg Business Week. Tim, on leave. Carol Masser along with Matt Miller. And, it's Friday, and we're going to talk about the debt ceiling. We're going to talk about negotiations, or I guess, not happening, at least at this moment. We're also going to keep an eye on the market's reaction, how it wraps up on this Friday, post all of the Fed speak that we've had so far.
Yeah, ton of Fed speak, but really it is only the debt ceiling negotiation walkout that seems to have had a real imprint on these markets. I mean, if you look at the intraday chart of stocks, if you look at intraday charts of bonds, you can see very clearly when that headline crossed.
But we're not down that much. Come on.
No, but we were up, and we've had an amazing rally.
All right. We're going to talk about all of this. We're going to talk about what Jay Powell had to say. Did he use the P word? I don't think he did, but he certainly danced around it. We're also going to talk about a kingpin on Wall Street, Morgan Stanley CEO James Gorman. He's planning to step down in the next year. And then we've got Meta's Instagram getting ready to compete against Twitter. How do you think about that one?
I feel like that is a space that really needs competition. I mean, the appetite for a competitor to Twitter, I think, has been huge ever since Elon Musk took over as, I don't know what his role is there, owner. Right now he's CEO, and he'll transition to chairman and CTO, but people want something else, and there isn't anything else.
Right. We're still using Twitter. We're also going to get into some of the wildfires and what that means for our kids, and we're going to talk about Wall Street's cloning business, and then we're going to talk a little bit about private jets and healthy cookies, which is, I feel like, Matt in a nutshell. Right now, though, countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic joined now by Scarlett Fu, as well as our colleagues Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Happy Friday, Carol Masser.
Happy Friday. You sound better. Are you feeling better?
I am. Thank you very much. I always feel better on Friday because it means I don't have to work the following day. Let's talk about the markets, though, because this is, we should point out, this was a pretty good week for markets. Not necessarily a good day today.
Agreed.
But there was a pretty big rebound over the last few days where the breadth of these rallies really started to just kind of broaden out here. And I think people started to get more confident that a lot of the issues that have been hanging over this market, if not on their way to being resolved, certainly weren't going to be as bad as originally priced in.
And then kind of Friday happened a little bit. But having said that, and speaking about kind of breaking out, right, getting some momentum behind the trade, certainly to the upside, you certainly saw that in the semiconductor area this week. And that's what I was doing, is taking kind of a longer perspective. The SOX is up about 8% this week. It's up 26% year to date, actually up almost 8% this week. Western Digital, you're looking at, what, about a 15% gain this week. Micron up about 11% this week. It had some news about $1.5 billion coming from maybe the Japanese government to make the next generation memory chips. So that gave some momentum to that one. So Micron up about 12% this week. And NVIDIA hitting a 52-week high yesterday. It's up another 11% for the week overall. It is, Matt, the best performing stock in the S&P this year, up more than 100%.
You know, it's interesting. A lot of people are wondering what's behind this rally. I'm not sure if anybody saw John Author's opinion piece today, but I thought it was really cool because it shows what isn't behind the rally, right? It hasn't been earnings. We're not happy about corporate America. It hasn't really been the Fed because we no longer really expect the Fed to cut as much this year, but it has, well, in a sense, it has been the Fed because it's really been about liquidity in this Fed program that they started. You can see the bulk of the rally that we have so far year to date in the period between, you know, the first bank failures, March 10th, 11th, 12th, 13th, and then a month later, April 13th. That's where most of it occurred, and it's almost all because of the extra liquidity pumped into the system in order to help save those banks and a baby bubble in terms of AI.
All right, let's take a look at the broader markets here. 4192 on the S&P 500. We should point out we actually opened above 4,200 on the day. That was the first time that's actually happened going back to August of last year. It doesn't look like we're going to close above that, barring a dramatic turnaround here, but we're only down fractionally, about 0.1% on the S&P, 2 to 0.3% for the Dow and the NASDAQ, and the Russell 2000 right now, Scarlett, down about 0.7%.
And it's because the big tech names aren't really performing today that you have the index lower as a whole, right? The best performing sectors here are energy, healthcare, materials, not exactly powerhouses when it comes to their influence on the benchmark index's direction. At one point, all 23 members of the energy sub-index were higher, healthcare getting a lift from Catalent, materials also in the positive. On the downside, you've got consumer discretionary, Nike, VF Corp all lower on the back of Foot Locker, communication services lower, and also financials has been a weak link all day today.
All right, well, let's talk a little bit, though, about what's been going on in the retail space here, because we got a lot of retail earnings this week here, and I think the Foot Locker earnings, while, of course, a small player in that space, really did rattle a lot of folks here. The guidance here for an 8% drop for the full year on the revenue growth here, really having some reverberations on those companies like Nike. American Eagle down about 8% here on the day. Ulta Beauty, which reports next week, down about 5% here on the day. And then Deere, an interesting story there. You talk about the machinery and industrial space. Those shares open higher by about 6%, a beat and a raised quarter for the company, but a lot of folks say that might be as good as if it gets. A lot of concern here that pricing power is going to start to moderate here. Deere shares now down 1% on the day. But of course, we have to talk about one of the big stories of the day, and that is Morgan Stanley. Those shares down about 2% on the somewhat surprising, and maybe to some people not surprising, announcement that James Gorman, the CEO of that company for the past 13 years, plans to finally pass the baton. Who he passes the baton to, of course, that wasn't articulated, but the names out there are known. I did want to take a quick look, though, as we always do anytime a CEO gets set to depart, is how did he perform for investors? Actually, he did a pretty good job here. Nice job. About a 234% return, 178% return on an absolute basis. On an annual equivalent basis, that's about 10% per year since he took over right at the beginning of 2010 here. And that pretty much beats out all of the peers with the exception of JP Morgan. That beats out Bank of America. It beats out Goldman Sachs. It beats out Wells Fargo. It beats out Lazard. It beats out Jefferies. The only person who managed to beat him out over that term was Jamie Dimon and JP Morgan, which came in at about a 12% return on an annualized basis.
All right, some great perspective there, right, in terms of those big bang stocks. So, all right, a kingpin of Wall Street getting ready for his exit over the next year. We also did have the king of all Fed speakers speaking today on a panel with a former...
Was that James Bullard?
No. Jay Powell, we're talking about, catching up with former Fed Chair Ben Bernanke. It was a Fed event in Washington, a conversation, and what Jay Powell said basically, kind of getting what?
I'm sorry. A lot goes on in my head, Carol. I'm an only child.
I can tell.
I was just thinking, when you said Bernanke, I was thinking, did he show up in a helicopter or not?
I have a tie that has Bernanke on a helicopter just dumping money
Carol,
out
you know
of a
better
pail.
to ignore me. I would think working with Matt.
Carol, please set up your
I'm trying. All right, so Jay Powell at this event with Ben Bernanke, don't say anything, Romaine. Anyway, making some comments about basically the recent bank crisis, maybe giving an assist to the Fed when it comes to its policy. Here's what he had to say. Listen up.
While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain.
All right, of course, that is the Fed Chairman, Jay Powell. Next to him was former Fed Chief Ben Bernanke. But it's interesting. I don't think I heard the word. Did he say pause?
Well, but he didn't. But I will say this. This was the most articulate he's been about the potential for a pause. I mean, everyone asks him this at every Fed meeting, every time he makes an appearance, and he always dodges the question. He leaned into it, and what I thought was important, he leaned into it with notes. And he came prepared to talk about this. And I think that was probably the key event, because when we came into this event, everybody thought it was just going to be him and Bernanke reminiscing about the old times. And he had those notes, and every time a question came up about it, he referred to those notes. He was ready to speak to the market.
I think it's really interesting that they're willing to admit now that financial conditions have tightened substantially. You know, there was a point where he said at one of the meetings that he thought financial conditions had loosened materially, and everybody was like, which index is he looking at? But now you've got everything tightening and a possible credit crunch to come. That means he may not have to raise anymore.
Yeah, well, it all depends on what time frame you look at, right? I remember that when he had said that financial conditions loosened, it was like, well, if you take a certain slice of period, sure, maybe, but over the longer term, not so much.
Well, I think it is important that, yeah, as you said, Romaine, he was on a mission to get a certain message across, and we certainly saw it. And Ben, Matt, you want to know if you look like Ben Bernanke?
Do I look like Ben Bernanke now?
Does he look like Ben Bernanke?
No, not at all.
Okay.
A little bit. I could see, you know.
A little more gray.
You got to gain him.
All right, can't wait to see what Romaine has for in store for us next hour. All right, we'll be back, guys, in less than an hour's time. We're going to wrap up the trading day, the trading week, our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. Catch us at 4 p.m. Wall Street time for Beyond the Bell.
While you see it your way, there's a chance that we might fall apart before too long. We can work it out. We can work it out.
Yes, indeed. Maybe that's what Jay Powell is saying. We can work it out, right? Little Stevie?
Is that Stevie Wonder?
Yes, it is.
Wow.
That's some old Stevie Wonder.
Mind-blowingly good.
Yeah. Incredible, incredible. All right, so we just talked about with our TV colleagues, Fed Chief Jay Powell giving pretty much a clear signal that he is inclined to pause rate increases next month, using his notes several times at that event in Washington. So let's get into it.
With Stevie Matthews.
With Stevie Matthews, Bloomberg News economics reporter. Nicely done. Stevie Matthews on cam in our Atlanta bureau, along with Bloomberg News economics and Fed reporter Jonelle Marte on Zoom in New York City. I want to start with you, Steve. Or Stevie, whichever. Did your family ever call you Stevie Matthews?
They did when I was like maybe 5 or 6.
Okay. Jay Powell, he didn't use the word pause, right? Technically.
Or skip.
Or skip. And he did refer, I think Romaine was right in saying he used notes. He was on a mission to be very clear in terms of what he said. So how do you read this as somebody who follows the Fed for us?
Yeah, you and Romaine are just killing it because, you know, that was the thing that jumped out to everyone who was watching this is that, you know, this was supposed to be a panel discussion at a research conference, and people were kind of expecting, okay, not a lot of news, and maybe they'll talk about R-star or the Phillips curve or something fairly academic. And instead, he gives fairly clear guidance about what they're looking for at the next meeting, and he's reading it from his notes. It's like, yeah, this was supposed to be a casual conversation. No, he had like notes throughout the entire thing. It was like, it looked very orchestrated, where they had the questions in advance, and he went to his notes, and it's like, he said exactly what he intended to say. And often he has been criticized for sort of speaking off the cuff, and people have miscommunication. There was no miscommunication here. I mean, he was saying, we're going to take our time. We've already done 500 basis points of hikes, and we're waiting to see the impact of credit tightening. So he gave a strong impression, while June is not decided, that he was leaning into June as a pause.
Janelle, was there any comment about cuts? You know, just a couple of weeks ago, the market was forecasting, I think, 4 cuts into the end of this year, and not only has that number come back down, but the sort of the will to make that forecast has also dropped as well. The conviction.
It's like 18%,
the conviction has dropped.
That's on a rate hike next month to around 18%. They were 33% before he spoke. So it's come way down.
That's behind a hike, and behind a cut, it's come down as well. So Janelle, any comments on that?
So he didn't talk explicitly about cuts today that I remember, but I think the message from him and from other policymakers in recent weeks, I mean, we heard this, for example, from New York Fed President John Williams, is that they're not expecting cuts. They do not see cuts this year as their base case. So I think that message likely remains. And again, we did hear a little bit of hawkishness, or some people are interpreting Powell's message today as a signaling for a hawkish pause, in the sense that they're not making any promises as to what's to come after June. Well, they're not even making promises for June, really, but they are sending that signal that they're willing to be patient, at least for now, to take a look at the data. So, I mean, I think we'll learn a lot more between now and the next meeting and beyond in terms of what we see from those reports. So, you know, those.
All right, you sound like you're data dependent. So I want to go back there. Steve, I thought that's what the Fed is, data dependent. So even though he gave a lot of clarity today, my understanding is they're going to look at the data that's in front of them when they next meet.
That's right. He did repeat that they're data dependent, and you know, as Janelle points out, in some respects, the message was identical to the last press conference. After the last meeting, not that much has changed, but you know, the key dynamic here is Powell does not like to surprise. You know, you always when you get to the day of the meeting or a day or two before the meeting, if the markets are saying there's a 90% chance of something happening, it's going to happen, because Powell does not want to surprise the markets. He's worried about there being turmoil. So the fact that the markets are getting the message that there's a pause, and this was basically a key opportunity if he wanted to lay the groundwork for changing how the markets were viewing things, he could have done that. He chose not to do that. So you did get this hawkish talk from Lori Logan, from Jim Bullard, from, you know, one or two other folks, and it's like all week long the hawks were out in force. And he was kind of pushing back, saying, nah, maybe not.
Was there any talk, Janelle, about the debt ceiling? Because that seemed to be the thing that really moved rates today. I mean, certainly at the front end of the curve, you saw pronounced movements. Was that addressed at all?
That wasn't a main topic. One of the first things that Powell did talk about in terms of uncertainty is actually the banking stress that we've seen. And, you know, he mentioned, and you had the clip earlier, that if that weighs on the economy, that could actually lower how high interest rates have to go. So I see what you're saying there. The market was responding to the bad developments or less promising developments on the debt ceiling, but it wasn't necessarily the focus of the conversation.
Absolutely, and these less promising developments on the debt ceiling, coupled with the stress of the banking system, have to be two of the things that really, you know, make financial conditions tighter, Steve, right? So this is kind of doing some of Powell's work for him.
But Powell addressed that specifically.
Right. Exactly.
Yeah, and I think the Fed's message on the debt ceiling is, you know, Congress and the administration need to get their act together and they need to raise the debt ceiling, but the Fed really can't do much to cushion it. It's like the strong message when Fed leaders, including Powell, get asked about it, he didn't really talk about it much today, has been, don't blame us, there's not that much we can do. Policymakers need to get their act together, but, you know, don't look to us to cushion, you know, the harm. And some of that may be just, you know, jawboning to try to force the administration and Congress to do something and not, you know, be complacent about the impact. But for whatever reasons, you know, their view has been there's not much they can do.
What I almost find as interesting, and I want to go to something John Williams, the New York Fed president, said earlier about saying that he thinks the U.S. economy will return to the era of low interest rates that was seen before the pandemic, and that output could be lower. And I think part of what came out too in the event with Powell and Bernanke too was, I think Powell specifically talked about the labor market slack will be extremely important in influencing future inflation. So kind of this idea of, you know, another debate, right, about can we get back to 2%, Janelle? And that is something that it feels like the Fed team and Jay Powell continue to hold on to.
That was certainly one of the themes that kind of tied together what Williams discussed in the morning and what came up with Powell. Yeah, this big question of, are we really going to go back to the world that we had before the pandemic of low growth, low inflation? And I think that, you know, it has a lot of ramifications for the Fed monetary policy framework, for example.
For valuations in all kinds of asset classes? Yeah.
Exactly. Yep. What's going to happen? Markets would have to be repriced significantly if we don't end up going back to that. So, I mean, a lot of questions remain, but it'll be interesting to watch.
Janelle, what was their verdict today on the labor market? Because that's been a debate lately. Some people come in here and tell me and Carol it's so tight, and then other people, well, we saw that story on the Bloomberg today that one Harvard grad had to apply to 100 different places to get a job.
So one of the main takeaways that Powell delivered today was that, you know, labor market slack is still likely to play a role for inflation in the future. So even though we didn't always see that direct link in the terms of we've had periods in the recent past where the labor market was really tight and maybe we didn't have inflation, he's saying going forward he thinks there's going to be more of a connection there.
Steve, final thought for you, just got about 20 seconds. Today, next week, what's front and center here?
Well, the interesting thing, you talked about John Williams, who's definitely, you know, kind of the creator, along with Laubach, of the R-Star, is a lot of Wall Street believes we're going to have persistent inflation, that we're going into a new regime. And they're pushing back and saying, no, there's no new regime. We're headed back to 2%. So that's the plan.
It is pretty fascinating. They're sticking to that 2%. All right, guys, thank you so much. Steve Matthews, a.k.a. Stevie Matthews, when he was 5 years old. Economics reporter at Bloomberg News from our Atlanta bureau. Janelle Marte, thank you. Economics and Fed reporter at Bloomberg News on Zoom in New York City. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is 3:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. Traders pairing bets on a Fed rate hike in June to 25% as Jay Powell signals a pause. Claudia Sahm is a former Fed economist and the founder of Sahm Consulting.
They're going to celebrate the day we hit 2% on a sustained basis. That's what they're looking for. I think they get comfort in some of the numbers. I personally think they've gone past the point of being data-driven. I mean, if they're being so like, look at the data, that means every time something comes out, the markets react to it. They shouldn't be creating volatility.
S&P now down 8 points, a drop of 0.2%. We've got the Dow lower by 113 points, down 0.3%. NASDAQ down 42, a drop there of 0.3%. 10-year yield 3.69%, with a 2-year that's yielding 4.29%. Gold up $18 the ounce, higher now by 1%. And we have got West Texas Intermediate crude down 0.3%, 71.62 a barrel. The other shoe dropping at Foot Locker, the stock plunging 27.5%, adding more evidence that consumers are pulling back on spending by cutting its annual sales forecast. Also after earnings, Applied Materials down now by 2.6%. Recapping, S&P down 9, down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. I heard you did some puns there, Charlie, so thank you so much. Wait, are you going to say something?
No.
Okay. I can't tell.
I mean, there's a lot. I have a lot to say, but we have a lot of people in the studio, so I don't want to hog the spotlight, you know?
Wait, oh, what? All right, shares of Morgan Stanley. Charlie talking certainly about the top stories, including Morgan Stanley, which is the stock down about 2.5%. It is, I believe, still the most read story on the Bloomberg about James Gorman, who transformed the company, who has been CEO. He's now in his 14th year. He's getting ready to leave in the next 12 months, at least as CEO. So what you need to know from Bloomberg News finance reporter Sri Natarajan in studio with us, our Bloomberg Interactive Broker studio, along with Bloomberg News Wall Street reporter Sonali Basak. First of all, I'm going to count down from 3, and you have to say yes or no whether you were surprised that he made this announcement. Wait. 3, 2, 1.
No.
Okay. Nicely done. Okay, why were you not surprised?
Although I would remind Sonali that 4 hours ago on TV, she said yes, she was surprised.
Well, I don't think I'm surprised about the announcement. I'm surprised that he said it at the annual meeting this morning in this fashion.
Okay.
Morgan Stanley kind of has a weird way of announcing things.
Agreed. I mean, it was like, of course, he's been there for 13 years. He's done a bang-up job. He's ready to go.
He's turning 65 in July.
Yeah.
Like
How many? Yeah. How many years has Jamie been there?
55 years. What?
Well, okay, but it's
CEO since 2005.
All right.
It still was a headline where when I saw it, I went, wow.
Well,
because it is big news. So it's not like it's unexpected, but it still was kind of a surprise.
Okay, well, and investors are a little bummed out. So what do we need to know?
Which is the nicest compliment, right? If you've been a CEO for 14 years and you say you're going to step down, and the
when
stock
it
goes down
rallies,
2%.
you really have to get worried.
I mean, they're not that bummed out in a down market. What's Morgan Stanley shares off? 2%?
Yeah, it's
2.5%.
That's a lot for a bank stock on a single
in a down market. You know,
I mean, a lot of the bank stocks are down today.
If I were leaving, I would want it to be at least decimated.
Stop. JP Morgan's just down 4
At least decimated, yes.
Okay.
That will speak well for your legacy, Matt.
Okay, so our parents are calling in and saying, okay, what do we need to know about this? So what do we need to know?
It's an important move because James Gorman has been one of the longest tenured Wall Street leaders. You would put him in the same club as Brian Moynihan, who took over as CEO at Bank of America around the same time in 2010. And the only other longer-term veteran out there is Jamie Dimon, who will always be the CEO of JP Morgan into 2100. But almost 14 years at the top, for the last 3 years, he's been very public about executing this succession plan. It started off with the leadership overall in 2021. You got a firm timeline then. That's when we found out that James Gorman told the Morgan Stanley board that he plans to be around for about 3 more years. In 2023 today, he says another year. So it's all pretty much going along plan, but it still is the momentous occasion because he took on a bank that almost collapsed during the previous global financial crisis.
All of them did.
Right.
Well, Morgan
Wow.
Stanley in particular.
They got the check. What was it? Check last
MUFG,
minute, right?
Yeah, they had to bring in a big infusion of capital from MUFG. But
No, it was a real mess, and a lot of his first few years was tackling with that because they were in deep trouble for the first few years of James Gorman's leadership. But what we've also seen over the past decade is a real transformation. Now you have a bank that has a dual engine of the investment bank that seems to be working just fine. The top three, Goldman, JP, Morgan Stanley, that's how we think about the investment banking space.
Right.
They are far ahead of everyone else. And then this giant wealth management juggernaut, $4.5 trillion manager in the wealth space, bigger than anyone else out there, even after the UBS CS merger, even after the UBS Credit Suisse merger, Morgan Stanley will still be the largest wealth manager in the world. And that tells you something. And now that they've set it up that way, it seems like this is about the right time for James Gorman to step aside.
So that leads us to the people.
So who comes in? So who?
So I there's a story that our former boss, Mike Moore, who is now our boss's boss's boss, he had broke back in 2015. And it was this moment where Morgan Stanley planned to cut fixed income jobs across all regions. It was a big moment on Wall Street, and it came a month after this fellow named Ted Pick had taken over. And Ted Pick is someone who rose under Colm Kelleher, who is now the chairman of UBS, and he had really tough positions. He had surgically had to fix some divisions at Morgan Stanley, to Shree's point, that had not done very well after the financial crisis. So he's one of the people that is in line. But then you also, and by the way, that division is loyal to each other. The question is, if he does not become the CEO, does that cause an attrition problem underneath those ranks? Then, to Shree's point,
Wait, so they have a good bench.
Huge. Yeah, they have a bench of three people, two that are particularly watched, Ted Pick being one of them, and the other being Andy Saperstein, who Shree has written about really recently in a Markets Magazine story, who was the wealth boss. And this man brings in, or is expected to bring in, $1 trillion of net new assets at the wealth manager every 3 years. He is just raking in money.
And two interesting things I'd like to point out. Anytime you have, you identify the likely successors and you go out and survey the analysts, generally you have some level of consensus. They might still say it's a close race, but everyone probably leans towards one candidate. But when we have heard from analysts today, about half of them are like, yeah, it's a very close race, but we think Andy Saperstein's more likely. Wealth management has been their growth engine. That's responsible for 2/3 of their valuation. And the other half are saying, no, it's probably Ted Pick. The wealth management success is priced in. More growth isn't necessarily expected. That growth trajectory might be the same, but if you had to see real upshot, which is if you wanted a tequila shot on your smoothie, that's going to come from your investment bank, and that's where Ted Pick reigns. And
where the growth will come, right?
Is what some of the analysts are saying. Not everyone agrees, but to me, it's just interesting that there is this neat little divide in the analyst universe. And the other thing I'd like to point out, and I think it's underappreciated when we think about James Gorman's tenure, and there will be more and more reflection and discussion on this, the Morgan Stanley that James Gorman joined was rife with political infighting. He joined Morgan Stanley from Merrill Lynch right after the former CEO of Morgan Stanley, Phil Purcell, was ousted in a coup. People hated each other. Divisions hated each other.
True, I remember that.
Well, that doesn't seem to be very much the case these days.
No, remember, Morgan Stanley is the white shoe shop, right? I mean, they don't fight publicly there. And so...
But doesn't mean they don't fight, right?
Well, what is interesting is they fight in a way... Well, it's not that they compete. And they set it up to compete. So if you think about how amazing the succession story has been since Gorman has taken over, think about how many high-profile presidents have left. Paul Taubman went off and founded his own firm. Colm Kelleher, now the chairman of UBS.
Right.
And remember, Colm was probably at that point not going to take over as CEO of Morgan Stanley anymore, leading the baton here to Ted Pick and Andy and all that. But Rockefeller, Greg Fleming, right? I mean, this is a history of talent.
How come I don't hear any women?
Great question. And we in the commercial break we were talking about this as well, and they've been criticized on the Hill for this as well. It's not just women. Morgan Stanley has lost a lot of high-profile women in recent years. Think Shelley O'Connor. She was once on that succession list as well. She ran
Zoe Cruz.
Yes.
Back in the day.
Back in the day. I think think Carla Harris, who is not necessarily in the line of succession, but one of the most senior black women on Wall Street. So not only talent drain here, but also the lack of a pipeline high enough.
You're
Yes,
welcome to
sorry,
jump
raise
in
your
anytime,
hand.
buddy.
Well, I was going to ask,
Professors in the room.
does this put any pressure on superstar bank CEO, the king himself, Jamie Dimon? I mean, he's been at JP Morgan forever. I know that over the same period they've outperformed in terms of the stock, but he's 67 years old. He's had his own health issues. Why doesn't he at some point say, like, okay, I'm done too?
You know what? I have a question for Sri.
Got about a minute,
Do you
though.
think that they have to take someone from inside of JP Morgan, or do you think they could bring back a Matt Zames or a Charlie Scharf at this point? Do you think they've telegraphed too much?
Charlie Scharf, interesting.
You know?
That makes this massive supposition that there will be a day when Jamie Dimon will step aside.
Yes, exactly.
It may never happen, guys.
It has to happen one day.
He really loves his job.
Well, with AI,
JP Morgan's
couldn't they just
Investor
create
Day is
another
Monday.
one? I
He
know.
will be asked
But
about
wait,
it.
Carol, you're saying, do you think AI could be the new CEO of JP Morgan?
There could be a Jamie, an
knew it
AI
was gonna get to
version
this
of
point.
Jamie, right? Metaverse, who knows what could happen?
Do you think Jamie is sitting there recording his sayings and what he would do? So even when he is not there,
Has he
interesting
uploaded
times.
his consciousness?
That's exactly what I was thinking.
All right. Great,
Thank you.
Great conversation.
Happy Friday, all.
More to come. I know, I thought Fridays were supposed to be quiet. What's up with this? Srinath Rajan, thank you so much. Senior finance reporter at Bloomberg News here in our studio. Shanali Basak, Wall Street reporter at Bloomberg News. Guys, you can go home now, right? You're done?
See you later.
Yeah.
Yeah, I'm out.
3:30.
Go,
I'm out.
run,
I've been here
first
since
run.
4, so AM.
All right, we got
Time to go home.
It is time. All right, we got to run off. Also time for World of National News. Off to DC we go, and Nancy Lyons. Hey, Nance.
Thanks, Carol. Republican negotiators are pressing pause on debt ceiling talks. Louisiana Congressman Garrett Graves says the talks are just not productive, and he is not sure if they'll be meeting in person again over the weekend. The U.S. could potentially default as early as June 1st if Congress does not raise the debt ceiling.
At the cross.
Families and friends are celebrating the life of Jordan Neely today during funeral services in Harlem. The 30-year-old died earlier this month on a New York City subway train after being placed in a chokehold by former Marine Daniel Penny. He told authorities Neely was ranting and threatening passengers. The Reverend Al Sharpton spoke at today's celebration.
When they choked Jordan, they put their arms around all of us. All of us have the right to live.
Sharpton says we all need to stop criminalizing people with mental illness. After a host of delays, the Massachusetts Air National Guardsman accused of leaking hundreds of top-secret documents is back in court this afternoon.
21-year-old Jack Teixeira has been in custody since his arrest more than a month ago. In that time, as his defense argues he should remain free until trial, more evidence has emerged, including computer searches of mass shootings and his own comments regarding his motives and actions. Government prosecutors say he is both a security and flight risk. It's unclear why Judge David Hennessy has delayed a decision and called for a second detention hearing. In Boston, I'm Janet Wu, Bloomberg Radio.
He was one of the best running backs in the game. Jim Brown, a Pro Football Hall of Famer, civil rights advocate, and actor, has died at 87. At the PGA Championship, Scotty Scheffler and Corey Connors share the lead at 5 under. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. The Dow, the S&P, NASDAQ are all declining. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks turned red after the GOP negotiators walked out of the debt limit talks. The Dow's now down 113 points. S&P's dropped 7, and NASDAQ is off by 35. The U.S. 10-year yield at 3.7%. Gold is up 18, oil trading in the red, and Bitcoin is lower by 0.5%. Of the main 11 S&P sectors, leaders were energy and healthcare, consumer discretionary, and telecom were under pressure. And leaders said the upside in the Dow, Cisco and Merck, while Walmart and Salesforce led to the downside. In the tech space, Instagram readies a Twitter competitor for a summer release. And in other news, Janet Yellen sent the regional banks lower after telling the bank CEOs more mergers may be necessary. After earnings, Foot Locker plunged 28%. And wrapping things up, Morgan Stanley CEO James Gorman will be stepping down within 12 months. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got about 18 minutes left in the trading session, getting ready to wrap up the day and the week overall. And we've got stocks just off their lows, little changes, down about 0.3% on both the Dow and the NASDAQ, as you heard from Charlie, down about 0.2% in the S&P. But it's really been the yield trade, the Treasury trade in particular, that's been bouncing around. Right now, that 2-year note, Matt, 4.3. Whew.
Yes.
And we were above that.
Yes. There were very serious moves in the 2-year when we saw the Republicans walk out of that debt ceiling negotiation. The first thing I did, actually, when I saw that headline cross my screen, was type WB and pull up the 2-year and put a GIP of it up, because you can see the huge spike in yields.
Yeah.
You know, if people are worried that the government's going to default on its debt, the first thing they do is sell off the shortest term bonds, and that drives the yield obviously higher.
They don't want to be holding, because those are the ones
That's
that are
right.
going to get defaulted on. All right, so let's see what John Porter has to say. He's Chief Investment Officer of Equities at Newton Investment Management, a global investment firm, and he joins us on the phone in Boston. John, hey, good to have you here with Matt and myself. It's been a little bit of a wacky week again. Debt ceiling certainly front and center for everyone. How are you factoring it in at all when it comes to strategies right now?
Great to be here. Yes, I think that the debt ceiling is something that I've honestly been surprised at how complacent the equity market has been towards it. I'm sort of of two minds. On one hand, short term, this is a massive obstacle for the market to try and clear over the next few weeks. And if there's any kind of setbacks, as you see in just a glimpse of today, I think there could be a significant rise in volatility in the markets. And I don't think equity investors are positioned for that. On the other hand, if I take a 2, 3, 4 month time horizon, I'm confident that minds will prevail in Washington. They'll do the right thing. They'll find a compromise. They'll set their agendas aside, and we'll clear this, and we'll move on to other issues. But there's an awful lot of issues, I think, for equity markets to digest. But the debt ceiling is the one that's foremost in our mind right now.
I mean, I'll take the other side of that trade, and I wouldn't have until a couple of days ago when I was reminded that we just suspend the debt ceiling all the time. If you look back over the past 5 years, we've been above it more than we've been below it because of the COVID pandemic. But you've had people on both sides of the aisle say we're not going to default, from Kevin McCarthy to Mitch McConnell to President Biden himself, which leads me to believe that if they really do run into an impasse that pushes us too close, they'll just suspend it for a period.
It's a reasonable scenario, Matt. I would caution you not to believe everything that you read, and I take all of the headlines that we hear from both sides with a dose of skepticism. And I would say if the debt ceiling was the only obstacle for the market, I would completely share your view. We've dealt with this time and again for years, for decades, and it will be in the rearview mirror at some point, and we'll move on to other things. I think the challenge is there's so many other things I think the market has to digest. Business momentum is slowing. The bank stress that reared its ugly head in March, I think, is leading to reduced credit availability. Consumer savings is about to be exhausted. On and on. Inflation's a concern. I think the expectations of Fed rate cuts are premature. So I think that with all of those other issues beyond the debt ceiling, I think it's a challenging setup for equity markets right now.
To me, one of the biggest worries is going to be liquidity, right? And John Authors wrote a column about how liquidity, the fact that the Fed has provided so much in the BTLP program is what's driven this rally. But we've seen stories the past couple days about expectations for Treasury bill issuance that could be as high as $1 trillion in the short span of a short few months after the debt ceiling negotiations are done, and that could mop up liquidity. Does that worry you at all?
It worries me a tremendous amount, Matt. It sounds like you've been in some of our internal research meetings at Newton this week, because we are literally just talking about this flood of liquidity that's come into the market over the past few weeks and months, in part to offset the banking related stress with the bank failures, in part in anticipation of the debt ceiling showdown. But that liquidity is going to come out of the markets. And if you want to know what moves markets in the short term, it's hard to find a factor that's more important than liquidity. And that's due to be drawn out of the market sooner rather than later.
So are you positioning ahead of that yet?
We're trying to. Look, there's a fear of missing out trade in the market right now that you have to respect, and no more so than in the technology area. And look, at Newton, we're long-term investors. We're investing with a 2-3 year time horizon, but we also make marginal investment decisions every day. And speaking for myself, in addition to my CIO responsibilities, I manage all of our U.S. growth strategies. I have cash a little bit higher. I'm trying to trade my portfolios a little bit more to take advantage of some tactical opportunities I see. But I definitely think that investors should be prudent and have a little dry powder in the face of what I expect will be minimum rising volatility, but potentially a bit of a downward move in equities. I just see the risk reward for equities being pretty unattractive right now.
What are the tactical opportunities you see?
I've been trimming tech. As an example, look, this has been a perfect storm for technology this year. You had low expectations coming into the year. You had cost discipline by some of the biggest market cap companies that's led to strong earnings growth. It's a cyclical business. The recession fears that have been so prevalent in the market, as they continue to subside, tech's benefited from that. Interest rate expectations falling. It's a group that benefits from that. AI hype, I probably should have listed that first. There's been a lot of things that have come together to make tech a great investment so far year to date. Really probably the main thing that's held up equity markets, but I see that trade as getting long in the tooth.
I do wonder, yeah, it's funny. I was looking at, I think there was a column too on the Bloomberg about different technical indicators. And if you look at the relative strength index on the NASDAQ 100, we definitely are seeing an overbought indicator in a big way. But we've seen that for several months, only for the names in the NASDAQ and tech names in particular. Some of the big ones just continue to feel higher. But you think it's time for a little bit of a break here, and just got about 30 seconds.
I think so. I mean, the NASDAQ's up 21% year to date. The Russell 2000's up 1% year to date. The narrowness in the market, the chase for performance in those mega cap tech stocks, I think is running on fumes at this point.
All right, we got to run. Hey, listen, John, have a great weekend. Thank you so much.
Great talking to you, John.
So appreciate it. John Porter, he's Chief Investment Officer of Equities at Newton Investment Management, joining us on the phone from Boston. Yeah, kind of interesting.
Yeah, very interesting.
What
And
about?
you know what? This job, it's just, I don't want to say never boring, but it's definitely not this week, right? There's so much going on, from the debt ceiling to the Fed to the earnings season that we've seen, that you can never take your eyes off of it.
No, and the market swings and perception of what's going on really changes, or can dramatically. All right, this is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Headline from the Bloomberg Professional Service. We begin with a developing story on this Friday. The American JetBlue alliance has been blocked by a judge as anti-competitive. The judge saying the deal upsets the competitive balance. So right now, shares of both airlines are moving lower. We have got shares of American ticker AAL down 1.3%. JetBlue shares, they're down by 0.9%. Again, though, worth repeating the headline. The American JetBlue alliance has been blocked by a judge as anti-competitive. James Gorman, who transformed Morgan Stanley after it nearly collapsed during the global financial crisis, plans to step down as CEO within the next year. Allison Williams covers those bank stocks for Bloomberg Intelligence.
I think the reason why this is timely for Morgan Stanley is, we're just past the pandemic. There's still a lot of economic and monetary policy uncertainty for sure. But as you know, Paul, there always is. There's always going to be. But we're past the pandemic. The company has digested two major acquisitions that they did, E-Trade and Eaton Vance. And so it does seem a calmer time and perhaps the right time to pass the baton.
And Allison was interviewed by our Paul Sweeney on Bloomberg Markets earlier today. Morgan Stanley shares, they are trading lower with other financials today, down by 2.4%. Speaking of regional banks and financials, shares of PacWest, they're down 2.3%. Western Alliance down 2.7%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this TGIF. Yeah, I'm ready to wrap up this week.
Have I annoyed you too much this week? By the way, Matt Miller here. I'm in for Tim Stenevec.
Tim,
supposed to be through
Tim!
August. We'll see if Carol lets me stay on long enough.
I'll let you stay.
Good, because I don't want to go out there looking for a job. It's not easy. You know, people say that you can just get a job no matter what.
You actually talked earlier this week, and you said you have some college dude friends.
Yeah. Well, I
And
have
they're-
some kids. They're like in their 20s, maybe about 30, whatever.
College
They're
kid
children.
dudes.
And they're looking for jobs in tech, and they can't find any. They're
In
sitting in my
technology.
house, like writing up resumes, throwing them. But I saw a story on the Bloomberg today. I don't know if you pointed this out or Ari pointed this out. One of you pointed out
It's
to me.
among the most read stories.
Harvard grad snubbed for 100 jobs.
Yeah.
That's crazy. If you graduate from Harvard, you should be able to get at least like 1 out of 10 jobs, right?
Right.
Not 1 in 100.
Right, exactly. I mean, this is kind of amazing. He is Fadi Ghazi.
No, she is Ashika Saxena.
Wait.
She's graduating from Harvard
Which
after
one
4
are you
years.
looking at? Oh, you're looking at the Harvard story. I'm sorry.
I'm looking at the Harvard grad.
I know.
You're looking at somebody who graduated from San Jose State. That's a little bit different. I can understand, no offense to San Jose State. I'm sure it's a very important academic
Lock
institution.
the doors now, man.
But if you graduate from Harvard, you should be expecting at least to get half of the jobs you apply for, right?
All right, so you're right. She graduated from Harvard, 4 years, bachelor's, master's in computer science, interned at Google, Microsoft, and Meta. She sounds like a dream employee applicant.
Yeah, but she sent out 100 job applications, and she only recently got job offers at 2 startups, and the major trick for her was pivoting away from big tech. That's how she did it.
Well, that says something. But we've seen this, right? Big tech, they keep laying off people. They overhired during the pandemic. We know the story there. But maybe this is a sign of the times. And you keep saying, listen, the labor market, right? We talked with Danny Blanchflower. That maybe the
Exactly.
labor statistics, I knew where you were going with this, that maybe they're not really showing an accurate story.
He says the unemployment number is just as broken as the VIX. And the VIX, by the way, I heard Tom Keene quoting the VIX today at 16.
I know.
Unbelievable.
Do we believe that complacency in the market?
No, do not. I do not.
I have a hard time with the VIX. I don't have a hard time, though, with our TV colleagues, which is why we are going to head over to them. We're going to wrap up the trading day and the trading week. Phew, beyond the bell. It's coming right up.
On what's
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Carol Masser and Matt Miller. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and our partnership with YouTube. Carol Masser, make some sense here of the market. We're not down by a whole lot, but I think the reversal that we saw earlier today, which sort of overlapped with comments from Jay Powell, comments from debt negotiators, and I guess everything that gets squeezed in between and the uncertainty that that caused.
Yeah, well, all right, so the market's reacted. And, you know, what will happen next week? What if we get a deal, right, out of Washington ultimately? You know, will the markets react again if we get more Fed commentary? I mean, this is what we live from data point to data point, from commentary to commentary. So we need some things to kind of cross off the worry list, Matt.
By the way, I just reminded myself of something I had forgotten since this morning. The VIX is trading with a 16 handle. Do you guys believe, Carol and I were just talking about this,
No.
Scarlett, do you believe that the VIX is representative of, you know, complacency that we're seeing in this market?
You know, perhaps right now it is, because there's a whole lot of things to worry about given the debt ceiling, given banks. But
Yeah,
for the
if
most
there's
part,
that much to worry about,
decent.
shouldn't it be 23 or 24, not 16?
Right. But what I'm saying is that we know that this is going to be a churn for a while, so you have to just kind of bide your time until you get there.
All right, so interesting wrap-up to the week here, guys, as we get the closing bells here in New York. Looks like we're going to finish pretty much red across the screen here on this Friday afternoon, but of course we should point out that we are higher on a weekly basis for most of the major indices. The Dow Jones Industrial Average on the day down about 100 points or 0.3%. The S&P 500 only down about 6 points or about 0.1%. The NASDAQ Composite is lower by about 31 points or 0.2%, while the Russell 2000 is going to close out the day, Carol, down by about 0.6%.
All right, so some good perspective on the major averages. As Romain mentioned, though, we're still up about, 3% on the NASDAQ this week. The S&P 500, though, Matt, most of the names today in today's trade to the downside, so we definitely saw a negative slant, no doubt about it, in the trade here.
Yeah, but it's up 1.6% this week. So a little bit more power to this rally that we've seen over the past couple of months. Take a look at the we're looking at level 2. Scarlett, how do you arrange it so that people look at level 1 here?
That's in the 3 p.m. hour, Matt.
Well, I think that's what I've never looked at level 2. Anyway, here you see the S&P 500 broken down into 24 different groups, and the leaders are autos, pharmacy, biotech, energy. The losers are the consumer durables, retail, semiconductors, and banks. I can't really make sense, to be honest with you, of level 2. So I'm going to go back to level 1.
It's true. Some of those sub-indexes only have 5 companies or maybe 1 company, so it's a little bit more of a finer read.
Well, look, consumer discretionary was the biggest loser if you look at the real deal. And that shows that people are getting a little bit worried about the consumer, getting a little bit worried about the economy here, and maybe it's time that they did.
All right, so let's get to some of the individual gainers, if I may, in today's trade. Catalent, #1 performer in the S&P 500. I think Scarlett mentioned it earlier with about a 16% gain in today's session. Definitely some outperformance. Developed systems for drug delivery. Keep in mind it was among the worst performer in May among the S&P 500 healthcare stocks, but definitely a different tone so far today. So this company coming out assuring investors on a much delayed investor call that its challenges are temporary while formally cutting its full year guidance. So nonetheless, though, some outperformance here in today's session. CrowdStrike, #3 gainer in the NASDAQ 100, a gain of about 2% in today's session, above its 200-day moving average for the first time since 2022. So some outperformance there. Stock's up about 40% so far this year. Reports earnings at the end of the month. And then I wanted to go to Cisco Systems. We talked about earnings this week. Stock up just shy of 2% in today's session. Great indicator on corporate IT spending. We know this. It's been an underperformer this year, but we did see the company come out in its earnings, did say some orders slowing down in the past quarter, but gave a strong sales forecast that topped Al's projections. So.
I was very surprised by the strength that we got out of that. And this was 2 straight quarters.
Right. But it's been underperforming, so I feel like any kind of good news as they remake this company has given investors some hope. Scarlett, over to you.
Yeah, so Cisco is the best performer in the Dow. The worst performer in the Dow was Foot Locker, which is off by a quarter of its value. Sales dropped 11% in the first quarter, and full-year revenue may also fall as much as 8%. That helped drag down Nike. It also helped drag down VF Corp as well. Deere, the farm equipment maker, reported better than expected quarterly results, but said that farm equipment prices will probably be hurt as the year goes on, so losing a little bit of that pricing power. And of course, we want to mention Morgan Stanley because longtime CEO James Gorman said he is stepping down within 12 months. He's lined up some successors, didn't say who they are, but we know that under his leadership, if you include dividends, Morgan Stanley stock has returned an annualized rate of 18.5%, and I was checking volume in MS, and trading is double the 10-day average right now.
All right, Scarlett, we want to pivot just real quickly away from some of the individual stocks, and we do unfortunately have to go back to the macro here, getting the latest update here on the Treasury's cash balance, dropping now down to $57.3 billion as of yesterday, and now we're learning that the U.S. had $92 billion in extraordinary measures left under its debt cap. Of course, that has been the big focus. Actually, actually heard from Bharat Ramamurthy just a little bit a while ago, giving a briefing to reporters saying that the economic damage is now starting to be done. Debt negotiators, as we learned a little bit earlier today, Scarlett, of course, walking out, Republicans, I should say, walking out of that meeting with their Democratic counterparts at the White House, saying that they felt, in their words, and I'm just quoting them, that Democrats were being unreasonable.
Yeah, and 57 billion in terms of the cash balance. I believe that's down 9 billion from yesterday. So over the course of one day, the Treasury has drawn down by $9 billion. Pretty incredible, especially as we get close to that June 1st deadline.
Yeah, and keep in mind, I mean, even just last week, we were over 100 billion. So this is deteriorating fast. And we knew this, right? I mean, the June 1st X date, I mean, you can do the math here on May 19th. And remember, she never said that it was specifically June 1st. She said it was on or about that date. So
it still seems like too little to sustain the entire United States of America for another week and a half.
Well, we just have to cut back.
The interesting thing will be to see if they suspend the debt ceiling to keep these negotiations going, because you know
that's always an option.
Yeah, exactly. And it's and our debt, quite frankly, has been higher than the debt ceiling for more often than it's not over the past 3 years. So
bottom line, they got to get something done, right? Because otherwise, there's going to be certainly more turmoil in the financial markets, global financial markets, and certainly how the U.S. is viewed. I mean, Business Week writes about it this week. You know, King Dollar has certainly been diminishing over the last few years, and you need to think about there's a lot of countries. China would love to see its currency replace the dollar. So there's a bigger, broader story here that needs to be brought in as well.
Yeah, and that broader story, I mean, that's the cover of Business Week. And I thought what kind of buried in that story were some great quotes from some of the smaller nations kind of saying they're ready for this. They've been wanting this for years. But, you know, whether that knocks us off for perch remains to be seen. I do just want to
still going to have to sell debt in someone else's currency. I mean, I don't think it's going to change much for them, right?
Yeah, well, not in the short term.
Maybe just not the U.S. currency. They don't want to endure a regular game of chicken every couple of years.
Yeah, I mean, this is a broader story. Of course, they're looking long term. And I think when you talk about the ripple effects here, at least in the short term, I guess the question is, guys, when we come back on Monday morning and we don't have any sense that there has been progress on that, do you think there's going to be a negative reaction? Because there was a negative reaction today, but as we just pointed out, we're talking 0.1% or 0.2% or something. So this wasn't a massive sell-off.
There was a negative reaction because there was a positive reaction yesterday. So we're just giving back some of that positive reaction.
I think some of it depends on the rhetoric, too, over the weekend. What do we hear, right? We have the president coming back. He is expected, I think, to give some speech over the weekend as well. And what kind of commentary we get. And if it gets more heated in terms of the rhetoric, I would think that financial markets might have a tougher time come Monday.
There's going to be a lot of rhetoric on the Sunday morning shows.
Yeah, there will be that.
I mean, look for yields to jump in the early in the beginning of the curve, but we have seen it a little bit, but not too much, and it kind of calmed down after Powell spoke today.
We should point out next week is going to be a busy week again. Remember, earnings season ain't over. There is a lot of economic data, and of course, a lot of Fed members are scheduled to speak as well. And of course, you mentioned we're probably going to hear a lot from the politicians. Biden's going to, in theory, be back in town, and I'm sure we'll hear from the Republican leaders as well. So this is a market that's going to have to digest a lot of conflicting signals from a lot of different folks.
I wonder if Fed speak will make a difference next week after Chairman Powell said pretty clearly that he's looking at a pause, right? And that's the going assumption right now for the month of June. There's still a lot of data to come before then, but he's looking at a pause.
Yeah, and it does look like, the Fed speakers have been under instruction to telegraph that they're more likely to raise than cut in the coming months. And it does look like if you put WIRP go into your Bloomberg, that the markets are not expecting many more cuts this year.
Here's a hint, guys. They're still data dependent. I mean, we talked with Steve Matthews, even after all of this, right? Ultimately.
But you can choose your data.
But just yesterday, Matt, 24 hours ago, what was it, like 40% chance, and that dropped today to like something like 20-something%. So already the market's now starting to price, we mean the chance of a Fed hike starting to price out.
But that goes to what you've been saying all week, right? Like from day to day, like these swings.
Is this healthy though? I mean, I already know the answer to that. It's kind of a rhetorical question. But I mean, it's just like this whipsaw, and then at the end of the day, we're just kind of back to where we were. I thought John Farrell made a good point on the open today here about this 9-month high on the S&P, which is basically like, well, we really haven't gone anywhere. Yeah, it's sort of like, okay, great. You get a cookie for basically just standing still for the last 9 months.
But we are still seeing that kind of strength. I mean, at least we're holding in a high level, right? If you go back to the dollar, right now we're looking at the Bloomberg Dollar Index, 1236. It's a very high level. So if you're worried about the dominance of the dollar, just look at how strong it is.
NASDAQ 100, best performance in 2 months. That is a wrap. By the way, we're talking healthy cookies later, so if you guys get hungry, come on over.
Healthy cookies?
Yeah,
that sounds awful.
I'm there.
I like the non-healthy cookies, thank you.
No. All right, that's a wrap.
What's the point of a cookie if it's healthy?
I
It could be
agree,
healthy
Romaine.
and tasty.
If you put a raisin in
100%.
it, is it healthy then? All right, that's a wrap.
raisins and
Our
cookies?
cross-platform coverage, radio, TV, YouTube, and on
awful person
Bloomberg
came up with
Originals.
that?
Shh, Romaine. We will see you again, same time, same place on Monday.
Happy weekend.
About how Instagram is planning to release a text-based app that will compete with Twitter. Instagram, of course, owned by Meta Platforms, formerly known as Facebook, the group known as Facebook. Got any comments there, Mr. Miller?
Look, I think I think this is one of the most interesting stories of the day, to be honest. Away from the macro, gobbledygook. This is a space where people have had appetite for a competitor that's just grown and grown and grown. Ever since Elon Musk bought Twitter and turned it into whatever it is now, everyone's been saying, I really, how often do you hear journalists say, I'm going to quit Twitter?
Do you use Twitter? No.
I don't really use Twitter that much, but I'm on it. You kind of have to be in this business. And it would be great if there was something else, like Instagram. That's what we've been kind of looking to for a competition. But of course, that's pictures and for the most part, not text. But if they do introduce a text-based service, I think you could see a lot of people float over there.
All right, so let's get to the story with our reporter, our Bloomberg News Big Tech team leader, in fact, who broke it, Sarah Fryer. She's also the author of No Filter, the inside story of Instagram. She's out there in San Francisco on Zoom. Also with us, Bloomberg technology reporter Alex Brinker, who covers this company as well, with us on cam in our San Francisco bureau. But Sarah, I do want to start with you. Tell us about this news or what we're possibly hearing or what might happen over at Meta.
So they have been working on something to take advantage, like you said, of all this pent-up demand for some alternative to Twitter. And this is something that at the company they've mulled doing for years and years, but it just didn't seem to be their bread and butter. Twitter has been always a very controversial service, very news-focused, and we've seen Zuckerberg shy away from the news generating side of things. But it does seem like there's demand for something now. And so what this will be is something that will allow people to take their verification over from Instagram, their handles over from Instagram, and even their community over from Instagram into this new standalone app. Meta's history with standalone apps that are of their own making is not very good either. I don't think that they've had a successful one besides Facebook and Messenger that they've made themselves. But it could happen. It could be the thing. There's demand.
Alex, let me ask you, I don't want to get in too much trouble, and it's a very political topic, right? But it seems like, to me at least, Elon Musk has taken Twitter into kind of a Trumpy space. And so the people who would want to leave are those who are a little bit more liberal, right? Are they really going to want to go to something that's owned by Facebook?
So what you're seeing, you have seen Musk be, perhaps the word is sympathetic to the conservative side. Your question on Facebook is a really good one. And the fact that this isn't the Facebook app, it's the Instagram app, I think gives them kind of a better chance. You have to remember, Instagram has 2 billion users there every day. And while you say you are not using Twitter every day, you're just on Twitter, a lot of folks might say the same thing for Instagram. They are on Instagram. This isn't a whole new app that's having to build a whole new kind of audience base. And they have been pretty successful in pushing into peer-to-peer messaging. And this could be kind of an extension of that. So it is fascinating with kind of the vibes, let's call it, Matt, around Twitter right now, and the types of folks that may or may not want to be there are clearly looking for somewhere else to have these kind of conversations that they've had in the past. This could be a reprieve. There are things like Mastodon out of the market. There are things like Blue Sky that exist, but they are certainly not not anywhere close to that 2 billion monthly users mark that Instagram can already kind of brag about. Now, if you do look at the other side, you have to remember Instagram's also a platform that's rolled out things in the past and then shut them down. We saw it with live stream shopping and some of their other endeavors. But if I'm going to be kind of a person who is betting on somebody with a big audience who might be able to steal some mind share from what Musk is doing at Twitter, this would be one that you'd have to probably seriously consider.
So, Sarah, what do we know about the testing that's been going on, right? They've been testing with celebrities and influencers, and I'm just curious, as you continue to report this out, some of the things that
That's a group of people with whom I want nothing to do, celebrities and influencers. I mean, that's why I would want to get away from Twitter.
I'm just curious what you're hearing.
From what I'm hearing, it's all in the very early stages. It's more like, I would maybe even call it more like focus grouping, more consultation with those groups to try to figure out how this thing should look. Instagram has historically been very good at talking to users during the process of developing a product and saying, what do you need? What do you want from us? And building based on that feedback. So I think that's maybe more what we're looking at here than celebrities having a party without us on this app that we don't get to see until the summer. I don't think that that's what we're looking at here. And I think that, listen, this is an interesting prospect for Meta too, because it's a little bit different than when you think about Instagram and Facebook, the networks they've built there. What they're considering doing is building something with a bit of an open source ability, a little bit more interoperable with other things that are out there. In some of the early information about this app that we've seen, they've said it may be able to be interoperable with Mastodon, which is one of those new Twitter competitors that is open source and very difficult for regular consumers to use. But that could give them a way to also play into that trend that's going on. Blue Sky and Mastodon, a bunch of others are in this open platform trend.
By the way, one of the problems at Twitter is that they don't make any money, right? So what is it that Mark Zuckerberg or Facebook and Instagram see in this business that makes them want to get in, right? Why would you want to get into a business that isn't very profitable? Alex?
Well, if there's one thing that you can give Meta a lot of credit for, it's actually figuring out how to make money. Whether it's on social media, the traditional kind of social media that you think of with Instagram, or in some of the ad formats and things like that they're rolling out on their messaging app, WhatsApp, they are really kind of clever at figuring out how to monetize all of their platforms. So this is also a company where that's frankly a priority. I don't know if you could always necessarily say that about Twitter, but in this kind of year of efficiency that Meta's CEO Mark Zuckerberg has established for 2023, I would guess that if this is something they're seriously considering, then they would want to make sure that that efficiency kind of mantra is being held out here and can make sure that the investment they're putting into this can actually result in ads. We don't have any reporting to that sense, but again, historically speaking, this is a company that's been able to come in, you could call it inspired, you could call it duping what other social media platforms have done and pulling those features into its universe and then figuring out how to make money on the back of it. You're seeing it already with Meta and Reels, which is kind of their lift of TikTok's feed of videos. Now they've had this big effort to monetize Reels, and they think that will start really paying off. So making money has not, you're right, always been Twitter's strong suit. It's the thing that Elon absolutely still needs to figure out with the help of his new CEO. But when it comes to Meta, again, one of their core competencies seems to be figuring out how to get those dollars in.
Now they're making money with Vines, right? Apparently.
Are they?
That's what she just said. What do you think Reels are?
Yeah, I guess
that's
so.
just Vines.
All right, so our thanks to Sarah Fryer, big tech team leader at Bloomberg News, and of course Alex Barinka, tech reporter at Bloomberg News. Meta shares, by the way, they're up 104% this year.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. The American JetBlue alliance has been blocked by a federal judge as anti-competitive. Shares of American Airlines fell today by 1.5%. JetBlue down by just about 1.8%. It was a down day for the Dow, the S&P, and NASDAQ, but an up week. So we begin with the weekly numbers. The S&P this week up 1.6%. The Dow this week up by 0.4%. And as we head into the weekend, NASDAQ this week up 3%, advancing for a fourth consecutive week. Today, traders paired bets on a Fed rate hike in June to 25% as Jay Powell signaled a pause. Stocks fell amid a slide in banks, S&P halting a two-day rally. S&P down 6, a drop there of 0.1%. S&P ending the week at 4191, below 4,200. The Dow down 109, down 0.3%. NASDAQ today lower by 31, a drop there of 0.2%. The 10-year yield 3.68%, the 2-year 4.27%. Spot gold 1977 the ounce, gold up today by 1%, and West Texas Intermediate crude 71.70 barrel, down 0.2%. Bottom line here, down day on Wall Street. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, so appreciate it. Charlie Pellet there with a Bloomberg Business News Flash. All right, you're listening and watching Bloomberg Business Week on this Friday. Carol Massar along with Matt Miller. So super excited to do this story. We were talking about it big time on our morning call.
Yes, we probably were. I don't know what story we're doing, so.
This is what we love, Matt.
What's the story?
It's a story that is being also read by a lot of folks on the Bloomberg. We're talking about, it's among our most read.
Cloning the quant strategies. I love this story. Yes, absolutely.
It's not that he isn't interested. He's just not focused right now, but that's okay.
I'm focused. I'm just not organized. So
it's
yeah,
you know what, to me, $70 billion business on Wall Street cloning quant trades.
To me, there were a couple of really big kind of bank innovation / trading stories that I was excited to talk about this morning.
You were.
So, yeah, I'm focused on this.
All right, I know
I just didn't know this was coming. We're doing cookies, right? Later.
We're doing cookies.
So I thought maybe you were.
Hey, Sam Potter has stayed up really late to do this story with us. So let's get to it. He is the editor on the story. It was written by Justina Lee, Bloomberg News senior editor and ETF czar. Sam Potter with us on Zoom in London. Sam, I'm so sorry. We'll get Matt focused for you. So glad you would do this because we did really want to talk about it. We think it's really important in terms of the innovation that's going on. So tell us about this story and what exactly Wall Street is up to.
Yeah, no problem. So this is a really interesting one. It's a story that I know that Justine has been trying to put together for a while, but essentially it's about these products that the big Wall Street banks have been hawking to their major institutional clients. So pension funds, insurers, endowments, family offices. They're called QIS. It stands for Quantitative Investment Strategies. And that's terribly dry and terribly boring and probably designed to be. But what they really is kind of knock-off quant strategies. So the kind of clever quant strategies, think trend following, think momentum, think value, these things that have a real basis in academia and that are pioneered by the likes of AQR Capital Management. Essentially what the banks are doing is taking that idea, taking that trading strategy and turning it into a swap or a structured product. And that is something that they can package and sell very easily. It's something that those big investors, they can pick and choose the ones they want. They're not stuck with, whatever the hedge fund is pursuing. They can pick which strategies they want to take. And yeah, it's turned into a kind of huge and largely unnoticed business in Wall Street because it's taking place between these big, a few of the big banks and their big clients. It doesn't really hit the headlines in the same way that normal quant business does.
I mean, I think it's so cool. It's kind of like the trade that Steve Carell was trying to negotiate with Ryan Gosling in The Big Short, if you remember. So, and one thing I was wondering when I read the story is, does Cliff Asness get mad about this? I mean, if these banks are like taking his IP essentially and then packaging it up and selling it off, the people who invented these quant trades or the professors that dreamt up these ideas and figured out how to, put them into action. How do you just take their trades and sell them?
Well, yeah, it's an interesting one. You mentioned Cliff. We didn't speak to AQR for this one, and I'm not sure they would have commented had we approached them. Obviously, AQR is one of the most famous hedge funds pursuing these quant strategies. But of course, as noted, the strategies didn't originate with these hedge funds. They were dreamt up in the classroom, and famously, that's actually where Cliff Asness started off in Chicago Booth School. I think for that reason, because it did originate in academia, the big hot hedge funds, they can't get too upset about it. But I think what we do have a hedge fund voice in the story, and what they object to perhaps more than anything is not so much the strategy being used, but any suggestion that these QIS are comparable to what they deliver. The QIS are essentially simplified versions, and by turning it into a swap or a structured product, you can't make changes to it, right? It's going to be a fixed thing. And the big thing that hedge funds would say is that they're a bit more sophisticated than that, that they're constantly evolving these things. And the main objection actually that they have is pointing out that banks don't have a fiduciary duty to the client in the same way that a hedge fund would. And that means that costs of execution and things like that are not necessarily going to be contained in the same way.
Well, you can see why hedge funds don't like it. They've got to justify their fees, right, and what they charge. But having said that, Sam, do these strategies, ultimately, these cloning strategies, pay off for investors?
I mean, there's such a range of them. There are more than 4,000, according to the estimates in the story, more than 1,000 added last year. So it really is a bit of a boom. Last year, those who watch the industry say about 61% of strategies actually made money, which is not bad in the sort of sophisticated trading space. But as with all of these quant strategies, risk premia as they are known, a big question mark always does hang over them, over how effective they really are, because of course then many of them are based on historic data, they're on looking back. The question is whether that works going forward. And we do mention one study from 2021 in the story that actually suggested that these strategies don't provide the diversification that investors are looking for, at least not when the markets go wrong. I guess it depends on your specialty as an investor. And it is worth noting that it's big institutions, people who really know their sort of risk management and their allocations, who are using these things, presumably as part of a wider clever strategy that's
right. It's not retail
money,
investors who are using these incredibly sophisticated products, but it is innovative on the part of the banks. And I noticed another story that I thought jived well. JP Morgan is expanding its algorithmic trading offering to U.S. Treasury investors, betting that computer-powered strategies can make further headway there into the world's biggest bond market. So there's just a couple of stories, and I should note, both of them out of London, Sam, with your name on them, that just further this narrative that banks are finding new ways and more interesting ways to make money, right? They're just coming up with these new products, and I guess that means investors must need them.
Well, every one of those products has got some sort of edge. It's going to be cheaper, it's going to be faster, it's going to reduce your bid-ask spread in the case of the algos in the treasury market. They are always, especially the big banks, guys like JP Morgan and their peers, they are always pushing the envelope. They're always trying to stay ahead of what client demand is going to be. In the case of the algos in the treasury market, what we've seen in treasuries has been a slow kind of evolution of the treasury market and trading platforms, and it's giving investors different options, different ways to access them. And so this is a question of JP Morgan trying to stay at the sort of leading edge of that, if you like. The question for me really is, and what I'm hoping to dig into in the sort of year ahead, is what the impact, the sort of secondary impact of some of this stuff is. So with the algos, for instance, ostensibly they're supposed to help with liquidity, right? They reduce the bid-ask spread, they make it easier and quicker to execute. But there are also worries that they create an illusion of liquidity that's not going to be there in a sell-off, or that they could accelerate a sell-off and make things worse. So
right.
yeah,
I mean,
everyone's pushing very hard. Yeah,
right.
Everyone's pushing very hard to be at the front, but the consequences are as unknown.
We got to wrap up, Sam, but it does feel like the test is still yet to be had, right? Like when everything starts to come undone, ultimately, does this help institutional investors perform better?
Or hurt them.
Or hurt
exactly.
them on the downside.
Remember after the great financial crisis, everybody was like, why are we dealing with these incredibly complicated derivatives?
Exactly. It wasn't like a savior. Sam Potter, you're a gem. Thank you so much for staying up because we really wanted to do this story. Have an incredible weekend. Sam Potter is senior editor and ETF czar at Bloomberg News, joining us on Zoom from London. You know, we don't make a lot of people czars around here.
True. It's awesome to be a czar.
It's a big deal.
And we love Sam's work on the ETF IQ show as well, I should note.
Right.
But staying up until, what time is it there? It's like 9:30? That's beyond the pale.
What time is it?
It's 9:30. Not too bad.
You need to get off to the pub. It's going to be last call in an hour and a half.
Have an incredible weekend. All right, we got to run. Sam, thank you so much. All right, we do have to go to Nancy in D.C. Roll the national news. Nance, take it away.
Thanks, Carol. Debt limit negotiations are on pause after talks between the teams of Republicans and White House advisors broke down this morning. Republicans walked out of the room with House Speaker Kevin McCarthy later saying that the White House is resisting spending cuts.
Yesterday, I really felt we were at the location where I could see the path. The White House is just, look, we can't be spending more money next year.
McCarthy said there just wasn't any movement, which forced the pause. A federal judge is ordering Jack Teixeira to remain behind bars while he awaits trial. He's the Massachusetts Air National Guard member who's been accused of leaking highly classified military documents. Prosecutors say the 21-year-old had a history of violent rhetoric and was caught by his superiors before his arrest, taking notes on classified information or viewing intelligence that was not related to his job. NASA is tapping Jeff Bezos' Blue Origin to develop a second passenger lunar lander for the space agency's Artemis program, which plans to send humans back to the moon before the end of the decade. Administrator Bill Nelson on the importance of having two landers.
It includes increased crew capacity. It includes transporting more cargo for science and exploration on the moon's surface.
Again, NASA Administrator Bill Nelson, the fixed-price contract is worth about $3.4 billion. Blue Origin says it will match that amount for a total cost of around $7 billion. Pro Football Hall of Fame running back Jim Brown has died. His family says the 87-year-old died peacefully in his sleep last night. At the PGA Championship, Corey Connors holds the lead at 5 under par. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ all declining today, with the S&P halting a two-day rally, failing to stay above the closely watched level of 4,200. Stocks fell amid a slide in banks and concern that lawmakers are struggling to reach a deal to prevent a default. The S&P down 6, a drop today of 0.1%, ending the week at 4191, heading into the weekend with a drop on the week, gain on the week, I should say, up by 1.6%. The Dow this week up 0.4%. NASDAQ had a big week, up by 3%, up for a fourth consecutive week. The Dow down 109 today, down 0.3 again. The S&P down 0.1. NASDAQ down 31, a drop there of 0.2%. John Porter is Chief Investment Officer of Equities at Newton Investment Management, and he was a guest right here on Bloomberg Business Week.
I definitely think that investors should be prudent and have a little dry powder in the face of what I expect will be minimum rising volatility, but potentially a bit of a downward move in equities. I just see the risk reward for equities being pretty unattractive right now.
10-year yield 3.67%, with the 2-year yielding 4.27%. Spot gold up almost $20 the ounce today, up 1% to $19.77. West Texas Intermediate crude oil down 0.2%, $71.71 a barrel. Shares of the Walt Disney Company dropped 2.6% today. Disney downgraded to neutral from outperform at Macquarie, which wrote the difficulties of the media company's streaming video service were coming at a time of broader uncertainty, suggesting limited upside for the stock. Recapping, S&P down 6, down 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Matt Miller, live in our Bloomberg Interactive Brokers studio, streaming on YouTube and, of course, on Bloomberg Originals.
But
what?
If you're going to try and find us streaming on YouTube, you need to know what to type in.
Bloomberg Global News.
Bloomberg Global News.
Thank you. You're like just, you know.
Well,
you
nobody could possibly guess that because the show is called Bloomberg Business Week.
When they listen and watch our, or listen to our weekend broadcast, we mention it, and we used to mention it a lot.
Well, let's start mentioning it again.
When I'm out in the field, when I was at Milk and
the
people
thing
are
is,
like,
my wife was like, "How can I find it?" I searched for Bloomberg Business Week on YouTube, and it didn't come up.
Can we table this for now?
Yes.
Okay. Thank you. Yes, I know. We just said that, Ari. I'm so glad everybody listens. All right.
Bloomberg Global News.
All right. Everybody be quiet because I want you to listen to Eric Roston, who's coming up. He is our sustainability editor at Bloomberg News. He is joining us via Zoom in New Jersey. This is on a story that is from our Bloomberg Green team. It is the Bloomberg Big Take today, which means our editorial team said, folks, you need to stop what you're doing, listen, read this. Because it's a really important story, impacts us all. So let's get to it. It is about the wildfires that are out there. Specifically, we're going to take you to Australia and really how it is already impacting our next generation. Eric, good to have you here with us. It is a serious story. Tell us about it and tell us about the reporting and what's been going on in Australia, because it's pretty disturbing, to say the least.
It really is. I think you put your finger on it a second ago when you said you need to sit down and read this. This is extraordinary feat of reporting that was conducted by our colleagues Amy Bainbridge and Angus Whitley in Australia. And it concerns the after effects of really, truly unprecedented and devastating fires that occurred in Australia in what they call their Black Summer of 2019 and 2020. And it's just completely heartbreaking. It's about families and kids who were either in utero or born during or just after these wildfires and developed, just these terrible cardiovascular issues. One child has what's called thunderstorm asthma. These are kids who daily, 3 years later, are living lives with medication and, in one case, limited mobility because like conventional air pollution, wildfire smoke and soot is very damaging to pregnant women damaging to children. I'll leave you before I, sort of shut up about it here. It profiles this one family and a young boy named Colt, who was 1 year old during the fire. And there's a line that's just stuck with me all day, describing what this boy went through during the fires. They write, the air in the town soon became so thick with soot that Colt's tears left lines of ash down his face. So like that is an image, powerful image, one of many from the story that's about kids and bad air and so much more.
So is this a story of pollution from man-made structures burning, or is it about really wildfire smoke? Is it the wildfire smoke that's the problem?
The story focuses very tightly on the wildfire smoke, but I'm glad you brought that up because it's important not to lose the overall context. The story is also, it's really like a medical mystery, a medical investigation, and while it's obvious to families and even obvious to doctors that kids who live through these wildfires have developed these symptoms and they're definitely related, doctors or scientists, they really need to understand the biochemical pathways that cause disease, right? But it's a safe bet, and science just in the last 2 years, because of these events, have firmed up that science. So there's the sort of the personal medical element of the story, but there's also this global pollution element that you that you mentioned, and we know from numerous scientific studies since these fires occurred in 2019 and 2020 that greenhouse gas emissions made them far, far worse. We're talking a multiple of times greater likelihood that it would be that dry in Australia, multiple times greater likelihood that it would be that hot in Australia. And so, again, these suffering children are on the front lines of not only wildfire management and wildfire alarm systems and other adaptation measures that a wildfire-prone country like Australia, always needs more of. It's very much about the very small, very young human face of suffering under climate change. It's a really heartrending story.
Right, already impacting, right, this, next generation. I guess, and Eric, Bloomberg, we're a lot about numbers and trying to put things in perspective, but, at the beginning of the story, it talks about the financial burden of these wildfires and climate change. We're talking about $36 billion a year in the U.S. alone because of these wildfires and the impact and the damage in terms of fighting them. And then you talk about long-term health problems just adding to that bill. And I guess what's interesting, I think about, here we have debt ceiling and we're trying to figure out how to pay our bills at this point. And I think if we don't kind of get our act together, there's the human toll on a younger generation, on everybody, but there's also the financial impact of what this will be if we don't kind of figure it out.
Well, and there's numbers and then there's just numbers, and it's impossible at this point anyway to aggregate, what this generation of this micro generation of kids who were born just during and after these fires, what that translates into in terms of opportunity loss and medical expenses and, parents' opportunity loss, and it's the dismal science, right? It's, it's like the last thing you want to be talking about, but like, it's obviously relevant. And as time goes by, we'll learn more, we'll be able to aggregate, there's really some, it feels like every year, that goes by, there's just increasingly sophisticated tools that allow economists to better understand the really the dollar denominations of human suffering. Right. This isn't a part of Amy and Angus's story this morning. Yesterday, just quickly, just quickly, sorry. By looking. Eric,
I'm going to have to jump in because they're going to take us out, and I'm so sorry. But we'll come back and do some more. But everybody should check out the story. I'll put it out on Twitter. Eric Roston of Bloomberg News.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The American JetBlue Alliance has been blocked by a judge as anti-competitive. Shares of both airlines lower today along with the rest of the market. American down 1.5%, JetBlue down 1.8%. American, meanwhile, and its pilots union did reach a preliminary agreement on a new contract, culminating negotiations that started more than 4 years ago. James Gorman, who transformed Morgan Stanley after it nearly collapsed during the global financial crisis, plans to step down as CEO within the next year and assume the role of executive chairman. Gerard Cassidy is head of bank equity strategy at RBC Capital Markets.
So, of course, this type of news, which is not shocking because we all knew that when they realigned their executives about 18 months ago, that his retirement days, were coming soon.
Today, we had Applied Materials shares decline after earnings last night. Applied Materials down today by just about 2.3%. And also today, shares of Foot Locker, that stock plunged after this morning's earnings report. Foot Locker shares dropped today by 27.4%. Foot Locker, by the way, adding more evidence that U.S. consumers are pulling back on spending by cutting its annual sales forecast. And finally, after earnings, Deere & Company today, shares of the farm equipment maker dropped today by 1.9%. Down day on Wall Street coming up top of the hour. We'll recap markets, and those are our top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Matt Miller here, in for Tim Stenivek this summer alongside Carol Masser. We finished the day down on the S&P 500, but up for the week, 1.6% the gain on the benchmark, the NASDAQ up 3%. Let's get out to Washington, D.C. right now, checking on world national news. For that, we got Nancy Lyons.
Thanks, Matt. The negotiations aimed at raising the debt ceiling came to a screeching halt this morning. A key Republican negotiator said talks between Republicans and the Biden administration need to, quote, press pause because both sides were far apart and the talks were not productive. House Speaker Kevin McCarthy addressed the impasse later in the day.
We've got to get movement by the White House, and we don't have any movement yet. So, yeah, we got to pause.
Yesterday, McCarthy sounded optimistic that a deal could be reached this weekend. It's now unclear if they'll even hold talks this weekend. The Massachusetts Air National Guard member charged with leaking highly classified military documents will remain behind bars while he awaits trial. Bloomberg's Ann Mostu has the latest from Boston.
U.S. Magistrate David Hennessy spent a month deliberating. The ruling comes after prosecutors revealed that 21-year-old Jack Teixeira had a history of violent threats and was caught by superiors months before his arrest, taking notes on classified information or viewing intelligence not related to his job. In ordering Teixeira to remain locked up, the judge noted that Teixeira was twice confronted by his superiors about his handling of confidential information before his arrest. The judge says the criminal case represents, quote, a profound breach of the defendant's word that he would protect information related to the security of the United States. In Boston, Ann Mostu, Bloomberg Radio.
NFL legend Jim Brown is dead at the age of 87. He retired after playing 9 years. He was with the Cleveland Browns in the 50s and 60s. Brown rushed for over 12,000 yards in his career, as well as 106 rushing touchdowns. He was also known for his roles in films and for his activism. At the PGA Championship at the Oak Hill Country Club in Rochester, New York, Corey Connors holds the lead at 6 under. That's 2 shots ahead of Scotty Scheffler in second place. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Matt and Carol.
All right, Nance, really appreciate it. Hey, we want to bring back our Bloomberg News sustainability editor, Eric Rosser. We had to unfortunately jump out because of a computer who was talking about, Eric was, the Bloomberg Big Take today, which is about the wildfires that have been going underway or were in Australia and the impact it's had on a younger generation, especially, you know, newborns and so on. So, Eric, forgive us. Computers sometimes are in charge. But go back to where you were, if you remember, and just kind of your thought.
Yeah, thanks for that. You'd asked a super important question about the economic toll of disasters like this. And it leads into a couple things I'd like to touch on real quickly, which is that basically economists have tools that are much more sensitive to detecting the harm of these kinds of events. For example, yesterday there was a study came out that we looked at that reported, you know, as we've known for a long time, like there was an enormous El Nino event in 1997, 1998. It's just El Nino is a warming of the Pacific temporarily that makes weather worldwide go haywire. It's a natural thing. And they think it cost about $56 billion in direct damage. Now, because of these new tools, economists can work with scientists, put together like the physical processes of the earth, GDP, changes in GDP over time for every country in the world.
Right.
And they concluded that particular El Nino